Once upon a time, two brothers tried to corner the silver market. They weren't criminals, they weren't traders, they were billionaire oil heirs who saw something most people didn't, an opportunity. And by the time the world caught on, they had driven the price of silver to nearly $50 an ounce and almost took down the global financial system. The year was 1980. The brothers were Nelson and William Hunt, and their bold attempt to corner silver triggered chaos, panic on Wall Street, rule changes at the COMEX, and a collapse that would go down in history as Silver Thursday. Yes, they lost billions, but they also proved something, that the silver market can be broken, and now it might just be happening again. This isn't a prediction, it's a blueprint. Because today, the silver market's under pressure like never before. Physical stockpiles are at historic lows. Supply deficits have gone on for 5 straight years. And silver has quietly been reclassified as a strategic resource by the US government. If you add a few $billions and the right players with a coordinated plan, what the Hunt brothers tried to do in 1980 might actually be possible today. This video is a thought experiment, a financial thriller, and a warning. We'll walk through how someone could corner the silver market today, why the system is more fragile than ever, and what it would mean for investors, institutions, and the global economy. This is my ode to the Hunt brothers and a question we should all be asking. Could it happen again? And if it did, what happens next? Let's dive in. The Hunt brothers, a brief history. Once upon a time, the richest family in America wasn't from Wall Street. They were Texas oilmen, rough, stubborn, and flush with billions in cash. Two of those men, Nelson Bunker Hunt and William Herbert Hunt, believed the US dollar was in trouble. The country had just gone off the gold standard, inflation was raging, and the Fed, in their eyes, was destroying the value of the dollar. So the Hunts turned to silver, not as an investment, but as money insurance. At first they bought physical silver, coins, bars, bullion, but they didn't stop. They bought more and more until they controlled over 200 million ounces, more than half of the world's deliverable supply. The price of silver skyrocketed from $6 to nearly $50 an ounce in under a year. It triggered a nationwide shortage. Even the famous Tiffany & Company ran ads calling them out for what they were doing. But here's the thing. They didn't pay cash for all that silver. They used margin, also known as leverage. And when the exchanges changed the rules on them, raising margin requirements and limiting new silver purchases, the Hunt brothers' plan collapsed. Silver prices crashed 50% in 4 days. The Hunt brothers were hit with a $100 million margin call that they couldn't meet. By March 27, 1980, known in history as Silver Thursday, the bubble had burst. The brothers went broke, and the market nearly broke with them. They lost billions, and they were blamed for destabilizing the financial system. But make no mistake, they didn't fail because the idea was crazy. They failed because they used debt or leverage. In our modern world, where some players don't need leverage anymore, that makes the Hunt brothers' playbook a lot more dangerous today. So could it be done today? At first glance, cornering the silver market in modern times might sound impossible. Markets are bigger, regulators are smarter, risk controls are tighter. But here's the truth no one talks about. Silver is one of the smallest major markets in the world, and it's more vulnerable today than when the Hunt brothers made their move. Let's break it down. Today, global silver mine production is around 850 million ounces. And when you include recycling, total annual silver supply reaches about 1 billion ounces. But most of that is locked up in industrial use, ETFs, long-term contracts, or government stockpiles. What's actually available on the open market is something called the free float, and that's estimated to just 200 million ounces. That's the amount of silver trading at any given time, and that number is shrinking. Let's do the math. At $50 per ounce, 200 million ounces equals $10 billion. To put that in perspective, that's less than the net worth of some crypto billionaires, less than what a single sovereign wealth fund spends on US treasuries, and a relatively small amount for some of Wall Street's biggest firms. And you wouldn't even need to buy all of it, just enough to trigger a visible liquidity crisis. You might only need 4 to 5 billion to break the system. But it's not just the size of the market that makes this possible, it's the state of the market. The silver market has been in a supply deficit for 5 straight years. Physical stockpiles are at record lows. The London bullion market has admitted to tightness, and silver bars are now being flown in from the US. Even the Perth Mint has experienced high demand, long delays, and system overloads. And for the first time in decades, the US government has declared silver a strategic metal and is now likely stockpiling it. Meanwhile, borrowing costs for silver, known as lease rates, have spiked to over 30%, signaling extreme scarcity. There are even reports of shorts unable to find the metal to settle their positions. So could silver be cornered today? Yes. And not with debt or margin, but with cash, with patience, and with purpose. All it would take is a crypto billionaire, a Saudi prince or sovereign wealth fund, or a quiet alliance of just a few big players committed to physical delivery. And here's the kicker. It may already be happening. We just haven't seen the final chess move yet. The old tricks, spoofing, dumping futures, naked shorting, they don't work forever. It's like trying to hold a balloon underwater. Eventually, the pressure wins. What would happen if someone tried? Let's say someone actually did it. A billionaire, a sovereign wealth fund, a few big crypto whales. No debt, no leverage, just pure buying power and the intent to disrupt the silver market. How would it play out? It would start slowly, quietly. They would begin by hoarding physical silver, bars, coins, and bulk purchases from refiners. Then they would start draining ETFs, especially the ones that can be redeemed for physical metal. Next, they'd go after vaults, COMEX, LBMA, Zurich, Singapore. And then the fireworks begin. Stage 1, the shortage becomes obvious. Physical silver starts disappearing from shelves. Premiums spike, $10, $20, even $30 over the spot price. The London market, already on life support, begins to seize. Traders can't find metal to settle their contracts. Borrowing costs explode. Lease rates hit 30, then 50%, and they keep rising. Short sellers are caught off guard. They can't roll over their positions, and they can't deliver. As one JP Morgan insider already warned, there's no free-floating silver left. Stage 2, the paper market cracks. SLV and other ETFs, those are exchange-traded funds, they suspend new inflows or redemptions. COMEX raises margin requirements. Retail investors rush in. Institutions scramble. The market depegs and silver pricing breaks into regional clusters, just like we're seeing right now. Large premiums in London, delays at the Perth Mint, US bars being flown overseas. This isn't a glitch, it's a fracture. Stage 3, global shockwave. Industries dependent on silver, electronics, solar, medical, they start to feel the pressure. Fabricators can't get supply, central banks grow uneasy, sovereign mints delay coin production. Then governments intervene. They institute export restrictions, emergency rationing, strategic reserve allocations, maybe even nationalizing mining assets. What started as a quiet accumulation becomes a monetary flashpoint. But this time, it's different. In 1980, the Hunt brothers nearly pulled it off. They bent the silver market to their will, but ultimately they lost. Why? Because they used debt. They were over-leveraged, and the moment the rules were changed against them, They were finished. But here, today, the playbook looks a lot different. Today's would-be silver corners aren't two oil barons from Texas. They're central banks, they're sovereign wealth funds, they're anonymous crypto billionaires who don't answer to regulators, and they don't need to use leverage. They can buy physical silver with cash, stack it in private vaults, and patiently wait. No margin calls, no COMEX, no paper trail. Just quiet, relentless accumulation. And the system, it's already showing signs of cracking. We're in the middle of a 5-year supply deficit. Stockpiles are down 75% since 2019. Even the US government is likely stockpiling silver as a critical metal for national defense. Lease rates, the interest paid to borrow silver, are climbing to levels, you guessed it, since the Hunt brothers. Meanwhile, industrial demand is accelerating. Green energy, electric vehicles, solar, and now AI. We're using silver faster than we can pull it out of the ground. And we haven't even hit the inflation-adjusted price of 1980. Back then, silver hit $50. Adjusted for today, that's over $180 per ounce. Think about it. Even at over $50 today, silver's still trading at a huge discount to its historic peak. And here's the scariest part. There may not be a single villain, no new Hunt brothers, just a broken market ripe for disruption. And a world full of actors with both the motive and the means to pull it off. The silver manipulators, they're cooked. The paper games, no longer working. And what comes next is something none of us have ever lived through. What this means for us today. It means that a market long controlled by paper promises is now being tested by physical demand. And here's something most people don't realize. Nearly 70% of silver mined today isn't mined for silver at all. It's a byproduct of other mining for copper, lead, and zinc. That means you can't just ramp up silver supply, even when the prices explode. To get more silver, you'd have to mine a lot more base metals. And right now, those industries are actually slowing down. So while demand is surging, supply is trapped. That's why this time feels different, because the laws of geology are working against the manipulators. But this isn't just a story about mining. It's a story about a paper market on the verge of losing control. Every day, thousands of contracts trade for silver that doesn't exist or will never be delivered. In fact, there are over 200 paper ounces for every real ounce of silver registered in the COMEX vaults. Think about that. It's not a market. That's a house of cards, just waiting for someone to topple it. So what happens if a small group of investors say, forget paper, I want the real thing? The system isn't designed for that. And that's what makes this moment so dangerous. After the Hunt brothers were crushed in 1980, the message was loud and clear. Never again. The government, COMEX, and the financial powers stepped in, not just to stop the squeeze, but to change the rules. They imposed strict position limits. They hiked margin requirements. And in some cases, they allowed silver to be sold, not bought. They didn't just fight the Hunt brothers. They changed the rules mid-game to make sure they lost. And the world took that lesson to heart. You can't corner the silver market. You'll lose. Maybe that was true back then, but today the game's changed. It's no longer about controlling the silver futures market. It's about owning real physical ounces. And this time, there may not be enough silver left in the world. Back then, the Hunt brothers were just two Texans trying to corner a financial market in New York. Today, the players are global. If someone or multiple someones wanted to corner the silver market today, they wouldn't need to control a futures exchange. They just need to start buying real physical silver and never sell. So could it actually happen? Could someone or a small group corner the silver market today? Not through leverage, not through paper contracts, but by simply buying up the physical supply and refusing to sell? The answer? I think it's already starting. Industrial users are scrambling to secure long-term supply. Investment demand is surging. Retail premiums are spiking. And the new players, they're sovereign wealth funds, crypto billionaires, tech executives, people who understand that this tiny, overlooked metal is critical for the future. The difference now is that silver isn't just money. It's energy, it's defense, it's the digital infrastructure of the future. And if the supply keeps shrinking, the market might just corner itself. No Hunt Brothers required. This isn't a conspiracy, it's not a pump and dump. It's the result of years of imbalance and mismanagement, of structural deficits, industrial demand, and global distrust in fiat money. And when a system is built on illusion, truth becomes dangerous. I'm not predicting a silver apocalypse, but maybe just sounding the alarm, because this time, it's not a couple of brothers trying to corner the market. It's bigger than that. It's a shift in trust, in power, in what real money actually is. And if you appreciate this kind of grounded, real-world financial insight, consider becoming a channel member or supporting me on Patreon. It truly helps me keep on making videos like this one. Thank you so much to those who have already signed up. Don't forget to like and subscribe. Thanks for watching, and see you in the next video.